Welcome back to Bazaar Morning Call. Well, looks like it's going to be a good morning of trade. There's a 100-point up move that the GIFT Nifty is suggesting. We've had some fabulous cues from across the globe as well. But let's see, our own market has been full of volatility last few days. So there's definitely still a little bit of caution in the system and resistance at higher levels. But plenty of stocks to talk about. First up, let's find out how Berger Paints did in their numbers. Mangalam is here to tell us more. Mangalam, morning.
Good morning. So it was interesting because, on the volume front, the company reported 14% volumes, and that was the highest that we've seen in all the companies that have reported numbers so far. Value sales have been impacted by about 5% price cuts, and also low-value products doing a lot better. So as a result of which, even as the volumes grew 14%, the overall revenue for the company grew just about 3%. The EBITDA was down 5%. Margins came off despite gross margins improving, and the net profit was higher. Why is it that the EBITDA reduced? Because of one, there was a one-off effect of subsidy received in the base quarter that made the base look a lot higher. Secondly, the company's recently started the Sandila plant, so expenses out there have impacted, and additionally, they've also increased their ad spends by about 1% of sales, so that's impacted the EBITDA too. But for the outlook, they believe that, in the near term and in FY25, they would continue to see double-digit volume growth, slightly lower value growth, but the forecast of a good monsoon bodes well for rural demand. However, given the current geopolitical situation, they're, looking at some sort of volatility in raw material prices. So, give and take everything and the impending competition, along with MSCI, expect the stock to be in the red today.
Okay, in fact, we'll connect with the management of Berger Paints at 9:30 a.m. today on CNBC-TV18. Mangalam, thank you very much for that. But M&M reports numbers today, Sonia. But ahead of that, you're tracking XUV 3XO sales, the recent launch.
Yes, the expectation was that the launch will do very well, and it has actually. The kind of bookings that we've got, right, for the XUV 3XO has been fabulous. I mean, the bookings that M&M has got, so we have that stock in focus. They registered over 50,000 bookings within 60 minutes. So 50,000 bookings were closed within 60 minutes of the commencement on the 15th of May. Now, they've already produced 10,000 vehicles. They have a manufacturing capacity of 9,000 per month, which has been set up. And the deliveries of this product or this car will start from the 26th of May, 2024. So it just goes to show that this entire space, the SUV space, has been growing by leaps and bounds. M&M already has #1 market share by revenue in this SUV category and has been sitting at fresh 52-week highs. The company comes out with its earnings today. In fact, not just 52-week high, it's a fresh record high for the stock. It's up 33% in 2024 already. But just to tell you a little bit about what to expect today, it's going to be a mixed bag because although the auto segment volumes are very strong, tractors are under pressure. So this time the tractor segment volumes are down by 20% year on year. But given that the monsoons are coming up, given that, a lot of the rural market recovery is unfolding, perhaps the management commentary on the tractor side could be positive, is what the street is expecting. So let's see. I'm going with green on the stock today.
Cars getting sold out in 30 minutes, right? You said 50,000.
60 minutes, 60 yeah, 50,000.
And homes in?
Homes in
3 days.
2 days.
Yeah.
Well, that's the kind of market we are in. Let's go across to Ekta now. Mankind Pharma reported numbers, and numbers were solid. Ekta is here with details. Morning, Ekta.
Well, yes, it's a domestic play and good set of numbers. Revenue was up 19%. Street was anticipating a 20% growth. The margins came in at better than expectations. It came in at 24.2%. Street was anticipating 22.5%. And the profit was better than expectations as well. The domestic revenue up around 10% year on year. Consumer health, which is basically a lot of their OTC brands, which everyone is very familiar with, was up around 2.6% on a year-on-year basis. There was recovery in Q4, but the entire fiscal was quite subdued for them. What really stood out was exports, up 230% on a year-on-year basis for them, on a low base, but nonetheless did well for them. Now, the board has approved fundraising of around 7,500 crores via QIP. They are planning to increase their investment lending guarantee by around 10,500 crores. They're increasing their borrowing limit to around 12,500 crores of the total company's the total company's capital reserves plus premium, whichever is higher. And on Mankind's interest in BSV, the company says it's speculative. The company regularly looks at inorganic opportunities. So no clarity there, but interesting that they are undergoing some amount of fundraising. More details on the call, which is at 12 p.m. this afternoon.
And it's a large fundraise, right? 7,500 crore rupees. Ekta, thank you very much for that. Let's move on to Dixon Tech, where the numbers look a bit muted. A miss on margins. Upasna?
Company has reported a mixed Q4, slightly below the poll estimate. Revenues stood at 4,658 crores, up by 52% on a Y-on-Y basis, but below the poll estimate of 5,392 crores. Mobile segment drove sales in Q4, and it is important to note that the share of low-margin mobile and EMS segment increased from 46% to 66%, impacting the margins. And margins in this segment are down about 70 basis points at 3.40%. Overall, EBITDA margins were down about 119 basis points and stood at 3.90%, slightly below the poll estimate of 4.03%. PAT stood at 97.3 crores, up almost about 22% on a year-on-year basis, which is a marginal miss as compared to the estimate of 115 crores. The miss on PAT estimate is mainly due to weak demand for TV, lighting and washing machine. Company in its earning conference call has highlighted that it is in the final stages of closure to add one more large global brand in the coming months, and the consolidation of mobile and EMS business will start Q2 FY25 onwards, is what the company has highlighted. It is also said that it is entering into making of display modules for the smartphones.
By the way, you'll hear from the management of Dixon a little later here on the show, and that's going to be an interesting one. But Upasha, thanks very much for that. Vivek is standing by with details on IEX and NLC. Vivek, morning.
Well, good morning. IEX delivered a good set of numbers, but expect the stock to remain range-bound given the fact that there are multiple overhangs in terms of regulatory concerns that persist. Number one is the implementation of market coupling. Number two, there's been a recent CRC staff paper which indicates that there could be some capping as far as variable costs are concerned. That could impact sell-side liquidity. But let's have a look at the numbers. Operationally strong set of numbers. Revenues higher by 13.5% on a year-on-year basis. EBITDA higher by 12.3% on a year-on-year basis. Margins are mildly contracting around 80 basis points, but still very strong at 86.2%. Net profit higher by 9.5% on a year-on-year basis. Other income this time around coming in at 28 crore. Now talking about the electricity volumes, again, up quite strong, 15.5%, but this is slightly contracted compared to what some of the other exchanges are saying, indicating that Q4 as well as April, there could have been a slight market share loss that IEX must have faced. DAM prices have actually declined to 5.24 rupees a unit, down almost 12% on a year-on-year basis. Now coming to NLC India, it's a bit of a weak quarter for the company, going with the red on this particular name. A lot of execution delays have happened as far as some key projects are concerned, and that has impacted the operational performance this time around. So revenues are down 31% on a year-on-year basis. Correspondingly, EBITDA down almost 65%, margins at 17% versus 33%, and profitability down almost 86%. One of the key reasons for the profitability going down is also the fact that the other income component this time around has reduced quite significantly at 494 crore versus 720 crore. Now segmental revenues, mining revenue down 11.5%, power revenues down almost 38% on a year-on-year basis.
Okay, thanks a lot for that. Well, Sudarshan is joining. Okay, Vivek, sorry, you have one more. You're going to tell us about NCC as well?
That's right, large infra player, NCC. Now, when you're talking about NCC, whatever the management has guided, they've managed to go ahead and deliver on that. Like other infra players, the key concern over here is the miss as far as margins are concerned, and that could remain an overhang on the stock. But what is the good part as far as the results are concerned? The management went ahead and raised the revenue guidance at the end of Q3. They've gone ahead and marginally managed to beat that as well. Margin guidance, they had given almost a double-digit margin guidance. So EBITDA margin, as per the company, has come in at 8.5%. Revenues higher by 31%. That is quite strong for Q4. EBITDA higher by 18%. Again, quite strong. Margins at 8.5% versus 9.4%, which is the key disappointment. Profitability higher by 18%. Now, talking about the guidance, FY24 order inflow came in at 27,283 crore, which was above the estimate that the company themselves had given of 26,000 crore. A mixed bag, but going with the green, but the margin disappointment is something that could weigh on the performance going forward.
Got that. Thank you very much, Vivek. Let's go across now to Sudarshan for some more earnings. Sudarshan.
Morning, Rima. So I have three stocks. So first, we'll start with Honeywell Auto. Going with green, though earnings were mixed, revenue has missed estimates, while EBITDA and margin have come in higher than estimates. Revenue has missed estimates by 4%, but it's higher 12% year-on-year. Margin has come in nearly 200 bips higher at 17.9%, and both margin and profit are at multi-quarter highs. Next is Jindal Stainless. It was a weak Q4. If we talk about headline numbers, EBITDA has fallen 4% and margin was down 70 bips year-on-year, and profit has slipped 30% and revenue was down 3%. But more than headline numbers, what more disappointing was EBITDA per ton. There was a sharp fall. Q4 EBITDA per ton has come in at rupees 14,500 and it's down 27% sequentially and down 33% year-on-year. Last is Titagarh. You would have seen that along with all the rail stocks, even this stock was buzzing off late. Now in the numbers, profit is up 64% and revenue has risen 8% year-on-year, and EBITDA has increased 26% and even margin is up more than 150 bips year-on-year.
Okay, we in fact have the management of Titagarh Rail joining us at 9:50 a.m. later today. Umesh Chaudhary will be with us, so do stay tuned in for that. A big buzzer there. Here's a quick recap though of our top stocks with positive news flow: M&M, Mankind Pharma, Dixon Tech, IEX, NCC, Honeywell Automation and Titagarh Rail. While stocks with negative news flow: Berger Paints, NLC India and Jindal Stainless. But Adani Ports is also in focus. So Sudarshan, you're going to tell us about that?
So along with Q4 results in the early part of this month, company had given the guidance for FY25 and it was a strong guidance. Now company has come out with its outlook for 2030 and it's looking at least very strong. So talking about the outlook, cargo volumes are seen rising to 1,000 million tons from the current level of 500 million tons. That's company is seeing in FY25. So basically, it's expecting it to double in next 5 years. If we talk about logistics revenue and EBITDA, both these are seen growing 7 times by 2030, and port revenue is expected to grow 2x to nearly 51,000 crore. ROCE of all major ports are seen rising seen above more than 20%. And if we talk about the headline numbers, revenue, EBITDA and FCF are targeted to grow up to 2.5x by 2030. So it's looking like a strong outlook if we talk about the 5-year plan that company has.
Thank you very much for that. Let's now go across to Manisha for a complete roundup of all the action from the world of commodities. Manisha, hi.
Hi, and thank you so much for that. I'll start with the gold prices because we are back around that $2,400 an ounce, and this is on the back of soft U.S. inflation data that we've seen in past couple of days. Add to that the U.S. retail sales that were also flat for the month of April. And with this now, the investors are pricing in a 72% probability of a rate cut in the month of September. Well, remember, gold has seen a lot of support in sense of Indian buying, China buying, and the global central buying as well. Not just gold, the silver price has also gained up by more than 3% overnight, and we are trading at a 3-year highs right now for this one as well. Silver is up 6% in the past 1 month. Good gains continuing for copper, where we are trading very close to all-time highs that the markets hit yesterday. Well, here as well, it's concerns of insufficient supply to speculative demand that the markets are anticipating in 2024 and 25 that has been supportive. The only area that perhaps has seen a bit of a profit-taking has been the crude oil prices. You have contradicting fundamentals here. On one side, the U.S. inventories have declined, but on the other side, the markets also are concerned about weak demand, especially in the OECD countries, and that seems to be weighing on.
All right, Manisha, thanks very much for that. So there's commodities in action. More on that later. We'll take a break. Deepan Mehta will be joining in from Elixir Equities. We'll talk specific stocks with him on the other side. We'll also, after that, connect with the management of Granules India as we talk about their fourth quarter earnings and FY25 outlook. Stay tuned.